Good day everyone, this is Tega. This is actually a March class and I want to explain and teach you guys how to trade structure, liquidity, POI and become profitable trading it. Do you understand? So we are all here to learn. So if you see anything confusing in this video, just calm down and understand everything I'm about to break down and ask your video or ask your question on the next class. So if you see anything confusing here, you can ask your question on the next class. So majorly I trade 3 pairs and I will advise you to choose a pair for yourself. Choose a pair that you feel like you are very much confident in risking in this particular pair, and how good you trust yourself with the strategy that you can risk your money in this pair, or this pair can make you good money just by trading this movement. So without wasting much time, I'm just going to break down everything I'm talking about and what I feel like explaining here. So majorly I'm trading only but 3 pairs, right? I'm trading 3 pairs. It's of recent that I traded oil, which is US oil, right? But sorry, I actually used to trade only but 3 pairs, which are XAU USD and XAG USD and BTC. So that's majorly what I trade, right? So before we continue this class, I have at least 5 to 4 things to explain in this video. So let me show you something. So if you come to this place, this is my trading set. So you can see here my strategy, structure, liquidity, POI. I have only but 4 trading rules, right? And trust me, if you follow these 4 trading rules, right, it's actually 5, but I did add the 5th one, but I'm going to show it on the video, which you can actually still use it. It's very much profitable if you can use it that way. I use it only when I feel like I didn't catch the bias from the most higher time frame. But in today's class we're going to be talking more of number 1, which is what we call market bias, right? So now what is market bias? Well, market bias simply means knowing where the trend and how the trend is moving at that given time, paying attention to what the trend is talking about and how to follow the trend at that given time. So you have to know that what we are about to practice or learn today is all about market bias. Okay, let me just mark it out. So this is what we are planning to trade, market bias. So everything about here. So the step 1, that's what this video is going to be. So I'm going to break down how I use these 4 method rules to always be profitable. Now let's go to the chart. So if I should go to the chart, which is my trading view, and go to pairs I trade, you're going to see what I'm talking about. So let's just go to the pairs I trade. So let me type XAU USD, which is gold. So and click here. You now see that what the chart looks like and how to trade the chart. So now we're going to be checking from my strategy rules here. So what is the strategy talking about, or what is the bias always requesting from us, right? So in structural liquidity POI, everybody has his own way of trading it, right? The main point is, what are you on the trend, or do you really know what the bias is talking about? Now, why I'm going to be teaching you guys this from afresh, many of you might know about directional bias, entry models, and everything, but you still need to learn, and that's why you guys came to me. And I want to like break down here everywhere, right? So if you watch very well here, this is my bias. And what is my bias talking about? Swing high and swing low, break of structure from the higher time frame, like 4 hours to daily time frame. As well, wait for market to react from any key level from the higher time frame. So that's what my step 1 of trading structural liquidity POI tells me. So now this tells that if I should go to any pair, be it any kind of pair, right, all I need to wait for is my my swing high to form and my swing low to form. Then after then, I'll confirm where the current break in market structure occurs. After confirming where the current break in market structure occurs, what am I going to be waiting for next? I need to see a market rejection or reaction from a key level in between the swing high and the swing low. So now let's go to the chart. If we go to this chart, you got to see that this is 45 minutes. So it says higher time frame. So this higher time frame tells on how and what kind of trader you are, right? So that's why I have 5 rules, but I keep 4 rules for teaching. And if you feel like to know the 5th one, it's personal. The 5th one is something I use personal. It's not something I give out freely like that. And yes, you not pay for it. If you want that particular one, you still need to like pay, and I'll give it to you. So I use that one personally. I don't know why the network is quite slow. It's quite slow. So now look at it. So what did I say? The rules tells us in step 1 to find a bias. So I told you guys that what bias means is catching to know where the current move of the market is and what the market has done so far and how the market is planning to go. Do you understand it? Like the next move of the market. So now to get a directional bias, you just need to like come to your 4 hours time frame or daily time frame or 2 hours time frame, whatever time frame you feel like, okay, this place is okay for me to get my bias, and I'll go down to the lower time frame for my confirmation. So if you come to this place now, you see I'm going to use the ones that are splayed out to explain what I'm trying to say. If you come to this place, I took some sells and also took some buys. So depends on what the market is telling me, that is what I do, right? I focus more on the current break in market structures. There is no business for me with the old break in market structures. I focus more on the current market structure bias. So mind you that the video and what I'm teaching you right now is about market bias, which is more of market direction. For you to be profitable, you need to know where the direction is pushing and where the market is heading. And this is me telling you how I get my bias and how to keep my movement consistent and doing everyday turn up on my chart. Now, if you want to be catching trade every single day, like for me, I risk $500 every single day, and I make 1:5, 1:6 sometimes. That is roughly about 2.5k or $3,000 every single day. And if I'm losing, I lose only just $500. So you should know that me giving out this, you need to worth it before I give it out. So now, what I focus more is the current breakout structure. I don't care if market has been very much bullish. Not that it's not necessary. Yeah, it's very, very, very necessary. Now let me break down what I'm trying to say. We have 3 major movements, which is an higher high push or a bullish trend, whichever name you feel like calling it. You can call it an higher high push or a bullish trend or a long trend. And we also have a bearish trend, which we can as well call what a lower low or bearish trend or short trend. So if you pay attention, you see that this is the two major movement that is very important in the chart or this forex industry. And we have the final one, which is what a consolidation movement. Now this one is what we call ranging markets, or what a consolidation, or people say market pushing from one direction back to the old direction and push back to this. Now pay attention, we trade these three major movements. So we trade these three major what movements, but which one makes us more money? So if I should ask you, which one do you think you can make good money just by trading it, which of them will you choose? Definitely we are taking this and this. Why did I say so? Because when you see this, you already know what the market is looking like and what the market is giving. But if you see this, you already know that we are bearish at that given time and we are more focused on selling at any given chance we have on the chart. But if you see something like this, you don't need to pay attention to it. Not that you cannot trade it, but I will advise you to leave something like this. You can just cancel something like this and focus on what this type of trade to be what profitable. Now let's clean to be what very what profitable. So now this is what I mean by that. Now how did I use these trends? Now I focus on what current breakout structures. So if I have something like this, it means I'm bullish for the next day or that same day. It means I'm very much bullish. This is directional bias. It means I'm very what bullish. If I should get what a break in market structure just like this for a bullish, that means that particular day I just need to exercise patience and see a pullback into a certain key level around this range, and I'll buy back again. That is how simple it is. And if you are planning to sell, you need to see a bias that takes out a previous low interest and gives us a new level. Then if market pulls back to any key level zones around the zone, it means that possible of dropping back is very much allowed. So if you have these two things in your mind, trust me, you have a lot to win. You have a lot of pips to catch, a lot of profits to eat. Now let me explain this. Now we're going to be going to the chart and explain everything which I just explained with the line. So if you come here, we'll come to the current date and we'll also react from the old dates. So now if you come here, checking from the old dates, you come to understand that let me clean everything so it will be very much clean. Let's wipe everything so it's a clean chart right now. So now we're going to be starting from the old chart, so it will not look like it's a current thing or something that stuff like that. So first thing, my strategy rules, which is structural liquidity rules, is telling me and how I trade it personally is getting my bias. So if you watch very well now, you see that market gave me a structure level here. So if you watch very well here, market pushed up and crashed down. So where is the break? So the break happens around this low, this interest zone. So this is a breakout structure. This simplifies that we are bearish, but doesn't mean that we can be bearish to take out this low, but it means this simplifies that once market pulls back to maybe 50% of this level, or maybe push back to somewhere around this level, we are still gonna be dropping for bearish. If at all, maybe 1,000 pips drop or something like that. So since it's going to drop something like that around this zone, so going down to the lower time frame can make us crazy amount around this level. Why? Is because it's on a higher time frame. And you can see after this, market pulled back, and what happens? Market dropped. Do you understand? So this is how simple it is. So if you watch again, you will see that we have another level interest around this zone. So sometimes market system moves in a different way. I'm still gonna explain everything later, step by step. In the next class, I'm still gonna explain something. If you watch very well, you see that this was a high, and what's this, and now market created this new level, then pull back here, and what, we continue. Do you understand? The same movement repeats, the same concept what repeats. It's just the way you use it. Now let me show you again from the old time. If you watch very well, this was a low, a push high, a current break. Now what happens next? Market pulls back into this level. We have what, a break to complete. So it means that at this very date, I'm focusing on selling and nothing but what, selling. Why? Because I have my current what, break around this level interest. So it means I'm bearish for that day. I don't know if you understand it, and if this video or this particular class is very much important and you are understanding it, let me know that you're understanding and everything is entering. So once you confirm your break or structure, that tells you the bias you should focus on, and that given date, on that given what, given date. So the only thing you need to do is what, exercise patience, wait for market to pull back, give you a confirmation of dropping back or buying back. That is when you go down to your lower time frame and what, get your confirmation entrance and push the trade back to the upside. So now let me show you guys what you should be doing. Yeah, because sometimes you might be right by sketching or what you sketched and still fuck up by losing your trade. So let me say you have something like this. You guys show it. So now you need to also pay attention to the mini internal break in market structures. So mind you that this is higher time frame, right? So the market gives us what, a break in market structure here. That means that we can still focus on what, looking for sales, and at the same time, if market gives us what, a break of structure here, that means we are still gonna be what, expecting a buy. Keep it in mind. Break or structure, that's a bias. Break or structure, that is a bias. Do you understand? Now let me explain this. If you watch very well right now, you see that what, market also broke structure here, and that was what, this pullback came back to what, retest key levels around this level, and after retesting, giving us a what, a shift or a reaction from there, which was somewhere around the zone. The reaction came from somewhere around the other block around the zone, and then we started what, looking for buys to the upside again. Now that we are looking for buys from this very level interest to somewhere around this bearish confirmation level interest. So that is what I'm trying to explain here. So we buy to sell from this key level buyers, and then we sell from that key level buyers, we buy from this key level buyers. Then everything is aligning what, together, and what, step by step. Now if you watch very well, this one completed what, is bias, because it has taken what, TP level from the higher time frame. Then after then, we confirmed the most recent what, break in structure here, and that was why I went for sell the next day. And what happens, TP was also what, completed around this level. Then after market completing key levels around that zone, if you see very well, market completed it. Then after the completion, you see that this is a what, a break in market structure here. So it means that what, market is still very much what, bullish. So if market pulls back to a key level or a leg that caused the break of structure, is going to also what react, and that is why market reacted from here. And what do? Go down to the lower time frame to take out the new high. So it means that this level was a break of structure that gives us the bias from this leg all the way to take out this level, and this level was a break of structure that gave us this bearish push, which is this bearish level here that dropped all the way to this very key level. Now I don't know if you see how the directional bias matches very completely just by knowing your break of structures very correctly. So this is a break of structure. Then what happens? Market pulled back into a key level. Where is the key level? We have breaker blocks as well here. Market put back there, give us confirmation. You go down to the lower time frame and get your entry and push it back to the downside. Now this is also a break of structure. Now it reminds you that since market gives us this break, respected key level here, so because it has respected here, doesn't mean that we are going to be targeting straight to take out the high, to take out this high. No, you need to monitor how to trade and avoid trap, because every break of structure means a lot of things in the forex industry. Every break of structure you're seeing is very, 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 very important to use. Do you understand me? So don't ignore any break of structure. Any break of structure at all is very important. He has a key level. There is a way to trade them, and there is momentum from the level that broke that structure. Break of structure here, key level zone. The drop happened immediately. Market tipped the level and it dropped. Now break of structure here, key level, where market dropped to this level, reacted, rejected, and then boom, we gained all the way up, take out this high, created a new break of structure, another key level. Then does not change anything for me, because I have another break of structure, and now I know what to do next to sell from somewhere around this level back to this level. I want to be sure that this video is making sense to you and you are understanding everything I'm saying in this video. If you don't understand it, don't worry, the next class explain and ask your question and I'll answer you very properly. Then that's what we have around this zone. Then after market we complete another bias, which we have currently had this high, reacting from the old break of structure level interest, giving us a new break of structure level interest. Now do you see how it's aligning together and how I've been able to be milking money in between there that looks like a consolidation? Why? Because of the break in market structure. And that's why I said earlier that I don't even focus on trend line. What I focus is current break in market structures. So now of recent, or before now, we have a new break in market structure, which was here. So it means that every break of structure gives us a swing high, swing low. Now this was a new swing high, and this was now the new swing low, or here can be countered to be a new swing low. Market pull back to a certain key level around this zone. So it means that market respected the breaker block, and then boom, market completed the bias, which can be this high, or you can target this level to be it, which is key level zone around there. So this was where I followed the trade to. So it was my target that was here, and after that you exercise patience and wait for the next break of structure. Now I took a sell, I took one loss here because of this break in market structure. Then after that market pulled back, which was this pullback. Then I went to the lower time frame. I saw something that looks like my setup. I took the trade, went a bit low to profit, flapped back, and that doesn't mean that I should overtrade. What I did was to exercise patience to get a new bias, and that was what market did here, giving us a new break in market structure. Now many people were looking for buys on this trade. Now since they are looking for buys, and I'm as well in this chart, I'm not going to be buying. Why? The current breakout structure was what? Bearish. And since the current breakout structure was what? Bearish, all I need to do is what? Sell the market. Now, selling of this market depends. Sometimes it cannot take out the current break in structure, and that is why I say use it for only what? Your higher what? Time frame. Using it on higher time frame gives you a clear view of what is going to be happening in the next 6 hours, right? So that's what is going to be telling you by knowing your current break in market structure. Now this is the current one, and if you see very well, or if you watch very well, you see that what? Market pull back into somewhere around 50% of this, and sometimes market react from 50%, sometimes it completes it very well. Just exercise patience for market to come back to somewhere around 50% or around key levels and react. So if you watch very well here, market tipped here and gave us engulfing candle for sell, right? So after then I started looking for entry to drop, and I'm very sure to convince you that I took a short sell from around 30 minutes around here, pushed it back to this level, and now market is back to this up. So you can see that the gold that people explain or say that gold is too hard, that is the same gold I'm explaining here, and it's very simple. If this video helps a lot, do well to what? Like, put what you think on what? The next class. Make sure that you asked your question in the next class, and I'm going to what? Answer you right there. And if you're interested to learn for what? The next month class, DM me privately or use the link on the description to reach out to me. The price there is $100. I don't charge much, and you're going to be profitable after learning. But if you don't feel like to be profitable, or you don't want to know what profitability looks like, don't DM me. Bye for now.